is still missing in DEX or DeFi exchange. So one thing I think I would like to highlight is in the US generally takes an approach of regulating via enforcement, right? So we have seen many big crypto players getting fined or entering into legal lawsuit either with OFAC or with DOJ. So this is again another thing which US likes to do. But again, there needs to be a clear regulatory clarity within the industry so that the industry players know what is expected out of them. To conclude, I think there needs to be a clear regulatory clarity both for centralized exchanges and even for the decentralized exchanges. So, and we need to work hand in hand and shoulder to shoulder with the regulators so that they get the feedback on what is expected from the industry, and also regulators need to tell us what are the key risks.
Absolutely. No, thank you so much for that, Roopa. I think it was a very in-depth look out for the state of regulations when it comes to exchanges these days. And I really liked how you kind of pointed out different jurisdictions in your answer, right? Certain countries, certain regions have different approaches. And I think that's where it clashes a little bit with the Web3 industry, because I think everyone working in this market, we are very global in how we operate. We are very global in our mindset, and yet obviously we have to be mindful of different geographies. Like for example, we've heard several occasions where more global exchanges unfortunately get reprimanded in certain local jurisdictions. Binance, for example, had to stop their activities in the Philippines. And while it's done with the user in mind, it hurts the users first, because all of a sudden users do not have the platform that they're used to and they do not have access to it. And Ken, would like to get your perspective on it, thinking what do users do in that sense, right? Are they still gonna go for the second biggest global player? Are they gonna turn to more localized entities? And how does the centralized versus decentralized experience comes into that?
What a good question. So this is one of the hottest topic issue in my country, which is the delisted or the removing or the ban of Binance. And of course, I think that our government are not ready enough to protect our customers or our users, because they don't know everything about Web3. There are also lack of knowledge about Web3, and they go to an agencies that's more on the Web2 but not on the Web3 stage of knowledge. And they declared that in just 3 months, I will ban the Binance. But up until now, congratulations, Binance users, you are still having your Binance. So I don't know if that is, our government is just doing this kind of a roller coaster or a circus in the Web2 space, but they don't know nothing. They don't know about the security, and they need the help and guidance from other countries that is more advanced rather than taking advantage of on our side. So I think this is a good opportunity that, of course, if the Binance will be the first to ban in the Philippines, of course, who will be the next? That will be the questions. Is it the Bybit? Is it the OKX? And why? And why they are doing that? If they are protecting the community, if they're protecting the customers, why they didn't do that? In fact, there is CZ before, they keep going in the Philippines just to, courting our government. But up until now, that kind of stuff because of that kind of fraud. In fact, I'm so happy that our government right now they are prioritizing our community to protect those users in the cryptocurrencies, to remove those fraud and scammers, because there are lots of projects in the other countries and trying to dominate in the Philippines, because Philippines doesn't have any like Web3 enthusiasts, our community there, and they going there and trying to speak about Bitcoin, crypto, but it turns out to scams or fraud. And that's why our government, they need to protect the users about that. So that's how we need to change. There are lots of bills right now, sponsors bills that they need to, to talk a lot in in our constitution, and perhaps if you check about the MENA, if you check about those kind of laws, we have also laws in the Philippines, in fact, and this is not like a second type of things. That's why I want this coming March I will be joining the second advisory of the PNP, CIDG, SWAT to make sure to protect our constitutional, and also our community there to make sure that there is an expert to check for those malicious projects that trying to, dominate the Filipinos.
No, very interesting, and I love your kind of passionate stance on the matter for sure. And so far we've been speaking a lot about users, right? Because at the end of the day, they are, the retail investors are the ones driving the industry, and they are the ones that market heavily depends on. But I do want to look at a different perspective and look at different companies and projects that are either in the process of launching a token or maybe have had their token for quite some time. I think if we come back to the topic of centralized versus decentralized exchanges, I mean, the topic of tokenomics and the right listing strategy is absolutely key in how well a project will perform and whether they will have a long-term, sustainable future. So, Cici, I'd like to kind of get your thoughts on, from the project's perspective, what are the factors to consider? Are certain projects only good for the centralized exchanges and others for decentralized? Is there such a thing as the perfect strategy?
Okay, I think for all projects, it really comes down to these important factors, which are cost as well as size of user base. I mean, there are other factors involved, of course. There's, of course, the regulatory aspects which you have covered. Those are very important as well. But size of the user base on an exchange is extremely important. And then also the cost of being listed on an exchange, that's also very, very important. I mean, in the huge top CE axis, the sheer volumes of transactions, they're huge user bases. It's something that is really hard to ignore for any token project. I mean, I don't think anyone will give up being listed on Binance or, OKISS or HTX. No one's going to give up, that, chance of being listed on such a huge exchange, getting the kind of visibility, getting the kind of eyeballs, getting really, like a huge user base. However, one thing to consider, of course, is the listing fees, which can be quite prohibitive. I would say that, on the top CE axis, the pricing can go up to hundreds of thousands of dollars. So that is something that I think that founders, teams need to take note of, because I see, because we were helping quite a number of tokens and projects with their fundraising as well as token launch. And I saw lots of founders being pressured by their communities, their stakeholders to get listed on Binance, get listed on OKX, just pushed really to get listed on one of the top exchanges. But as I said, the teams, the founders, they really will have to weigh the pros and cons. Is there, substantial benefit to being listed on a top exchange as opposed to, let's say, getting listed on a smaller exchange, but then, growing your community? So these are all things, that teams and founders have to decide. Some teams, some projects might benefit a lot more being listed on a CEX, and the top CEXs, and some might benefit more, from a, small exchange. But what they would then need to do is really put in a lot of effort into their marketing to grow their communities and grow their user base, because without that, they're not going to be able to see the traction that they're hoping to get. Some of the projects in the space, when they come in, they want to know how they would be able to navigate around the high fees, listing fees, and all of that. And one thing that I think would be really, really beneficial for projects is actually if they would be lucky enough early on as they launch their project, to get funded by the exchange arm of these exchanges, because that would actually get you closer to being listed on one of these top exchanges. The other thing, of course, is to get onto their launchpads. Launchpads are great. They give you great visibility. And then if you're on one of the top CEX launchpads, it's like instant user base. It's just, the benefits are substantial. So I think that, founders need to actually look at, some of these other ways to launch their projects. Of course, launchpads on DEXs are also, on the, like the decentralized kinds of launchpads are also extremely, extremely helpful, and they really help to, put the token projects in a very good place to start, like their solutions, to start growing their database, to start, like just, being in the space and, massively growing. So yeah, there's like lots of different ways, really, how you want to position yourself. But I would say that, it really depends on what your project is about. One insight I'd like to share is that when we were doing marketing, in fact, just recently we're doing marketing for one of the top exchanges. Sorry, excuse me. And we found that during our marketing campaign, a lot of the signups, so the user base, the users who are actually using the platform, even though like benefits were offered to the, like signups that did more KYC, a lot of people didn't go for that. So we had, okay, just to give you a rough idea, it was like a 20 versus 80%. So even though like all the benefits were so much better if you signed up with KYC, a lot of people chose to go with no KYC or minimal KYC. So to answer your question, Roopa, like you were bringing up like how there needs to be lots of regulations. Yes, of course, regulations are there to protect the users, but at the same time, the users are not interested in getting KYC more than they need to be. So I think there has to be a fine line with what you're putting out there for KYC requirements. I, for one, I'm really, really for ZK kinds of technologies, decentralized KYC. I hope you guys, in regulations and all that, I hope you're going to let us look into decentralized KYC because that would be something I think we're all, I think I can speak for most people, happy to be KYC, but in a, like a ZK kind of way is good.
Yeah,
a third
absolutely.
party. Yeah.
Thank you so much for those insights. And I mean, there are so many factors to consider for projects when they're thinking about their, token launch. I loved how you pointed out there's quite a few, factors to take into consideration, right? You've got to choose the right platforms, be that launchpad, centralized or decentralized exchanges. You've got to pick the right partners, and not just the marketing partners. Your market makers are just as important. Absolutely every participant in your token launch strategy will have a massive effect on how would your token perform and how happy would your user base be. It's very interesting that even though our discussion today is kind of centralized versus decentralized exchanges, I think the majority of our discussion still centers around central entities. I think that's a part of it is, a bit of a human psyche. I think we understand central entities a bit better, but it kind of brings us back to the topic of what crypto was all about, right? Bitcoin was invented to be a decentralized peer-to-peer system, yet I think the biggest companies or the ones that are doing so well on the market are very centralized. And even our discussion today was, again, kind of leaning more towards that direction. Kishore, I'd like to get your kind of thoughts on it. I mean, is decentralization the end goal still, or have we kind of changed a little bit the trajectory of this industry along the way?
Yeah, that's a good question. my colleagues have answered quite a bit on this. But I'll just share from a high frequency trading perspective because we are a high frequency trading firm. And I believe both are going to coexist. And the reason being is, if I have to go from fiat to crypto, I can't go on a DEX. I need a centralized exchange, right? Also, if you're a trading firm like us, you get better rates on a centralized exchange. But if you're a position trader and you're managing a fund and you have a portfolio, then a decentralized exchange gives you much better options because you don't want to be having $100 million and see another FTX. I rather have the keys with me. I'm more, I can sleep well. So they coexist. The good thing about cryptos, if you compare it with the traditional assets like stock options and stock futures, I don't know whether you've had the experience of opening accounts with a traditional broker vis-a-vis crypto. It's so convenient. You try to open an account with a stock broker, and the inconvenience of going through the entire account opening process vis-a-vis, I can actually just connect my wallet right now. If I want to take a position on Bitcoin, I can. So I think the entry barrier is much easier with the DEX. With the centralized exchange, even though they're very good on the cost, but if you've been through a KYC, so many times even a liveness test you can fail. And it's very irritating, and they don't even approve it. So I think a DEX is important if somebody wants to get started. But if you are looking for reduced cost, convenience of trading, then of course centralized exchange is the choice. But I think both are important. As far as regulation is concerned, most of the centralized exchanges have a DEX now. So technically, they are already regulated. And support, I see a lot of DEXs are now offering support, which was not there till last year. So the lines are blurring. And personally, as a trading firm, we use both. The good thing about DEXs now is they have moved on from Ethereum, which is very high gas fee, to other chains like Binance and Polygon and Arbitrum especially. So it's absolutely a breeze now. You know, it doesn't cost much. But still, as far as leverage is concerned, you get much higher leverage on a centralized exchange compared to a decentralized exchange. Also, the number of coins that you get to trade on a centralized exchange is much more compared to a decentralized exchange. But if you're managing a $100 million fund, you don't want to be buying into a token which just got listed yesterday. Yeah. But there's one thing which I would like to address to all the exchanges out here.
Looks so amazing.
As a high frequency trading fund and as an OTC trader, you know, all these centralized exchanges, they will list the coin on the spot exchange. The coins will run up, and then maybe after a month, they will list it as a perp. But by the time the coin is on its way down, which is quite unfair. I think the centralized exchanges should allow perp trading immediately, as soon as the coin is
I'll take note of that.
listed.
I'll feedback to my team. Thank you.
Why? Because if I feel that coin doesn't deserve its run up, because it really doesn't. It's all a game of making sure there's no supply.
A game of be there at the right
Exact.
time, at
So
the right place.
yeah, but then if we guys come in at that point, we can actually short the coin to make sure that it's a fair market. Otherwise, unfortunately, retailers go in when the coin is already 10x, 20x, 100x, and then because they couldn't get into the IDO, there's a lot of artificial buying, artificial market making, and artificial marketing. And these poor chaps, they have no clue. They end up becoming suckers. So we guys can come in and we can make sure there's a balance. So if there's artificial buying, there will be real selling.
All right, interesting
Yeah.
points. Roopa, did you want to add to it?
That's where the regulation comes in, right? And then there are all this new technology where the regulators want us to identify and monitor all this activity.
Absolutely, and I knew you would make that point before we wrap it up. But I think we had a pretty interesting discussion. We touched upon a lot of angles, you know, from KYC to user experience to listing strategies and global versus local experiences. I would like to kind of give each panelist a chance to give a one statement. If there was anything that the audience today had to take away from our discussion, what would that be? Cici, we can start from you and then.
Well, I think that it's pretty clear that users are interested in a centralized exchange experience. They want that kind of experience. They want the liquidity. They want the users. They want to be able to trade. Like a lot of times indexes, sometimes it doesn't even happen. Like the trades don't even happen. So that's something that it's clear. And we also know that users are interested in decentralized KYC. Okay, they're interested in less KYC. So I'm thinking, why don't we have like a hybrid situation, right? I mean, right now that's what we're exploring, like building next level types of exchanges, taking into considerations, what the users want, but at the same time, also of course considering the regulatory landscape and taking, all of that, and finally giving a product, a solution that is beneficial for the community.
Absolutely, super user-focused perspective.
Hybrid exchange.
Amelia?
I think from my point of view, the whole entire Web3 space is supposed to be decentralized, as you mentioned earlier. And I think DEXs are something that is definitely a direction that the crypto trading is moving towards. It's just that user experience, as people, get more feedback, get more understanding of what users actually want versus what they think users want, then we will see an improvement in the trading possibilities. And I think market makers are even coming into DEXs to support liquidity as well. So undoubtedly, this is a direction that we're moving towards into an ideal situation. But of course, regulatory, everything else, will definitely step in, but we'll get past every obstacle as they come along.
So we do need centralized exchanges.
But still, yes, please.
Roopa, your thoughts?
Yeah, I would just say that regulatory clarity is really important, both for centralized exchanges as well as for decentralized exchanges, right? And then with the influx of a lot of cash or influx of funds coming in with this bull market, we do see both players, centralized exchanges as well as decentralized exchanges, taking key part, right? And we also see institutional players coming in with exchange-traded funds being offered for both retail as well as institutional participants. So public-private partnership between regulators and the industry is really important.
Absolutely, couldn't agree more. I think, meanwhile, users are still, prefer no KYC types of procedures. From a business perspective, everyone wants clarity to actually establish themselves and grow in the right direction. Ken, your thoughts?
Yeah, by the way, guys, I have a customer support. If you want, I can help you. So, yeah, I've been in crypto space for 8 years, and I'm doing this full time. And I've been had a lot of experience, like 200 plus crypto projects. Either whatever you choose, by centralized exchange or decentralized exchange, the something that is very special there is all about fast and accuracy. That's it. Choose that.
User experience. Again, we want speed and accuracy. And Kishore, I mean, you already gave us a couple of notes on what centralized exchanges should be taking on their radar. What are your final thoughts?
I feel the regulatory thing is just too much being played out. Unfortunately, some of the good players have to be stopped from operating. What they should do is, actually regulators can reduce the gap between the rich and the poor. A lot of guys who cannot get access to alternative investments, especially the unbanked, they are going to the DEX. Instead of that, right now, if I have my banking app or if I have Payla or Grab, I should be able to immediately convert my Sing dollars to, let's say, a few stable coins. And I'm already KYC'd. Now I can just transfer that to an exchange and start trading. So I think regulators should allow the banks and allow all fintech companies to easily convert any fiat to cryptos, just like how they are allowing, for example, I've got Sing dollars, I can now easily convert to US dollars or Australian dollars on my app. And this will really, really help decentralization.
Love that. I think using Web3 to bring, general financial equality to the whole different parts of the world is definitely important. I love discussions like this. I think there is a lot of, there's a lot of experience here on the panel, but at the same time, there's a lot of thoughts for moving forward. And at the end of the day, the industry is still very young, and I'm looking forward to seeing, these people like my panelists here, people like in the audience today, building that future, and whether that's going to be decentralized, centralized, or a bit of a hybrid of both. We shall find out. Thank you so much for everyone's attention today.
Thank you.
Thank you.
That was fun.
Thank you very much once again to our moderator and panelists with the topic trading on DEX and CEX. What's the difference and what are the risks of KYC producers with technology? Now we'd like to welcome our next panel of discussion with the topic blockchain and identity verification, addressing security and privacy concern. So let's welcome our moderator, Jane Low, on stage. And let's welcome my panelists, Elton, Tay, Safeheron Browne, Sir Henry Wang, Jack Fu, and Tan Zi Chong on stage. Can we get everyone to sit according to your pictures on the background? Yeah? Get everyone to sit according to the pictures. All right, awesome. Take it away.
Testing, testing.
Testing.
Right, yes. So thank you everybody. Welcome everyone to the panel discussion. The title is Blockchain and Identity Verification Addressing the Security and Privacy Concerns. And for this panel today, I'm your moderator, Jane Low, and joining us are 5 speakers with very extensive experience. So it's a very packed panel, and we have 35 minutes. So we are just, and it's a very big topic, so we are just going to give like really important highlights. So we will tackle this panel in 2 themes, in 2 halves. The first half, we will start with the security and the privacy threats landscape for 2023 and what are the weaknesses that led to some of these compromises. And the second half of the panel will tackle the issue of how do we tackle, what are the lessons that we learned, what kind of concerns are these cybersecurity and privacy incidents raised, and what are the mitigating measures with the latest blockchain and identity developments. So before we start, I'm just going to ask each speaker to spend 30 seconds to 1 minute to give a quick introduction about themselves. So if we could start with Elton.
Hello. Hi everyone. My name is Elton. I previously ran Chatmint, which is a social file product that tried to tackle scam and fraud using blockchain tech. Now I'm leading products at the Binary Holdings. We are a Web3 infra for telcos, gaming, banking, and insurance. So yeah, that's about it. So,
hello, working here. Good afternoon, everybody. My name's Stephen. I've been in crypto for about 6 years, a number of different businesses, 3 regulated businesses in Europe, a custody provider, a corporate finance business in Ireland, and a brokerage business for digital securities in Germany. But underneath my title today is Sorted Wallet. So we've made the first and only crypto wallet for these kind of older style phones that are still used by about 400 million people around the world. To date, we have about 100,000 users, mainly in emerging markets such as Pakistan, Nigeria, Tanzania, and will give my perspectives on the topics today from that point of view.
Henry?
Thank you.
Good afternoon, everyone. So my name is Henry Wang. I'm the founder of SmartMesh, and also I'm the founder of the World Web 3 Alliance. So I coined this terminology Web 3.0 in 2003, which was 21 years ago. So for so many years, I'm witnessing the development of the Web 3.0 and the Web 3. So there's a misconcept about Web 3.0. What is Web 3.0? So it's my mission here for 20 years and trying and let every government and all the whole industry to really understand what is Web 3.0. It's not blockchain and crypto only, and the major issue is actually the data and application. So for the Web 3.0, we return data ownership to users. Then blockchain and crypto provide a mechanism to monetize for everyone and also protect the security. So later I'm going to introduce about these concepts.
Thank you, Henry. Jack?
Hey, hello everybody. My name is Jack. Thank you very much for having me. So I'm the head of business development for Safeheron, and we are an institutional grade asset and vault management platform. We serve enterprises. So basically we help our clients to enhance security and governance in terms of digital assets management while also complying to regulatory requirements. And the clients that we serve ranges from exchanges to digital payments to asset managers. Thank you.
Thank you, Jack.
Hi. Good afternoon, everyone. My name is Chong. I'm the co-founder for UKISS Technology. We are a tech company that's primarily focused on first building a secure lifecycle management for your private key. And also, by the way, we also launched our first hardware wallet that is towards securing a user's digital assets. But apart from that, we also are building an ecosystem that's surrounding Web3 security. Thanks.
Yeah, thank you, Zichong. Thanks for the introduction. So let's just kick off the panel with the first theme, really, which is security and privacy threats landscape in 2023 and the weaknesses in this blockchain infrastructure ecosystem, human factor, all that led to these compromises. And I think a lot of people, when they talk about the security and privacy landscape for 2023, they say, wow, the valuation has suffered so much, right? It's no longer very attractive for hackers to hack the blockchain, no longer attractive for people to steal crypto, but it's not true, right? So I'd like to get your thoughts. So Jack, I think you have some interesting views to share on that.
Yeah, just 3 main points. Actually, if you look at it, like crypto is known as the Wild Wild West, right? And for very good reasons, right? It's like literally, hardly a week, or a month goes by without a significant hack. So if you look at history, just in 2023, we had about almost $1.8 billion worth of assets that was, exploited or lost or leaked, right? And actually, more than 40% of it, right, is due to private key compromise, right? And there